Step number 3, this is clarifying the overall trend situation. You might get distracted easily when you see something like final step you usually take before deciding whether to buy the dip or not. You look for... Hello everybody, welcome back to Day Trading School with me, Amy. In this program, I'm going to answer the burning question, what to do when markets crash. When is the right time to buy the dip? How do you know that this is an actual dip? In order to answer this question, you actually need to answer another question which has something to do with fake outs and breakouts. And this is the reason why I'm also going to provide you some sort of, basic knowledge about fake outs and breakouts in this program. I will be also talking about an indicator I use, and on my Instagram channel, on my story probably, I am going to show you how this particular indicator is calculated. This is not very important, that's the reason why I'm not mentioning it in this video, and if you are very interested you can basically Google it, you don't need to wait for me to explain it to you. Why is it important to understand how indicators are calculated? Now, we have a different trading strategy, you and I, and we've got a different trading style. So sometimes it just doesn't make sense to use a particular indicator, even though it might be very useful for me, it might, be not important for you. So knowing how something is calculated usually helps you to decide whether you want to use an indicator or not. So, all right. And make sure you subscribe to my channel and give this video a like if you think it was useful and you learned a lot. And make sure that you leave a comment if you have any question or if you want to say something. And yeah, so let's get started with today's program. Now, as I have introduced, I'm going to clarify the question, in which case it basically makes sense to buy the dip. Now, in order to answer this question, I need to know what might happen, what is likely to happen in case of a breakout. Is this likely to turn into a fake out, or is it likely to turn into a real breakout? If I can answer this question, I would also know whether to buy the dip or not. Now, let's get started with something very simple. I'm going to draw this chart for you. Let's say this is GBP USD, the current chart. And let's say this is my well-respected support zone. I'm just going to focus on the support zone because this is the current situation. I usually look for support and resistance on the higher time frames because those are just more reliable. That means on the monthly level and weekly level, like here, as you can see, right? Or on the weekly level, like this one here. All right, so this is step number 1 when it comes to deciding whether to buy the dip or not. So you mark your areas of support and resistance, and you look for these areas on the higher time frames. Step number 2 is you usually wait for a directional move. That means in our case, I was waiting for the market to get very close to this support zone. That means if you are in the middle of nowhere, like this one here, you would not start reflecting whether to buy the dip or not because you are in the middle of nowhere, right? You really need to get close to a well-respected support zone. Just in this case, it actually makes sense to think about buying the dip. After you have done that, we move on to step number 3. This is clarifying the overall trend situation. You might get distracted easily when you see something like this. You might think, oh, we have a convincing bearish market, but the problem is focus on the overall picture. That means the overall idea at the moment is we've got a strong uptrend. We're just stuck in a ranging market. That's it. And on the weekly level, the same. We've got a convincing uptrend. We're just stuck right here in a sideways market. After you have done that, what you do is you move on to step number 4. And this is now an indicator I use, and most professional traders use this indicator as well. It's called OBV. on balance volume. It has something to do with volume. You need to, if you want to, get an insight into the market volume, this is the indicator that you can use. It's this one right here, this one and this one, right? It gives you an insight into whether volume is increasing or decreasing. Why is this important to know? Now, the idea of OBV or of volume is actually the question, what happens in a breakout situation? If a price level breaks and we've got a decreasing volume, in this case, it is more likely to turn out to be just, a fake out. That means we expect the price to break through this support zone and then come back to this previous price range. But if we have an increasing volume and price basically breaks through that level, in this case, it is more likely to turn into a real breakout. Well, you know what I mean. Yeah, you know what I mean, right? A real breakout. So that means if we've got something like this and we've got an increasing volume and the price breaks through that level right here, so it's more likely to become a breakout than this situation where we have a decreasing volume. So the overall volume idea is very important to understand breakouts, because if we can answer the question whether it's more likely to become a fake out or a real breakout, this will make us look for, opportunities to buy the dip or basically not. And in this case, we actually do have, the overall situation is that here we had an increasing volume, right? But ever since, we've got a decreasing volume. So this makes it very interesting. What's going to happen? What's going to be the reaction when price comes very close to this well-respected support zone? And then that is actually step number 4. And step number 5, this is your final step you usually take before deciding whether to buy the dip or not. You look for reliable, price patterns. That means, something like double bottoms or cup with handle. And step number 5 is you start looking for. Now then you can basically move on to step number 5 before deciding whether to buy the dip or not. Here in this case, you start looking for price patterns. Wait a moment. You look for price patterns, you look for candlestick patterns like this one here. Let me show you. For example, here, the interesting question is when you get close to a support zone and we came to understand. For example, right here, when you get close to a support zone and you can clearly see it's a decreasing volume, so you might start looking for, opportunities to buy the dip. In this situation, I basically ask myself, wow, this could be, a double bottom, isn't it? So that's a very reliable price pattern. So on the daily level, you then start basically looking for, on the hourly level, you start looking for reliable price patterns like this one, a piercing pattern, right? But then it needs to get confirmed. And then it got actually confirmed today when there was a change in the overall trend, right? We first of all had a downtrend, and then we had some sort of a bottom one to a third time, and then the trend basically changed from a downtrend to an uptrend, and this would be now the opportunity to buy. Or you could have entered, a bit earlier, right here after this sign, right here. This piercing pattern is quite reliable, taken into consideration that we are very close to a support zone, that we've got a decreasing volume, etc. That means, even if a fake out happens or if a breakout happens, it's likely that it might turn into a fake out and price might come back to this previous price range. So not much can happen actually. Yeah, this is it actually. These are the 5 steps you might want to consider before thinking about buying the dip or not. If you liked my video, make sure you subscribe to my channel and you give this video a like if it was useful. Leave a comment in order to share your opinion or whatever your experience is with buying dips. See you in my next video. Bye bye. Take care.